Hello friends, welcome to Nirmal. I am Piyush and today we are bringing to you a corporate conversation. It's a result season and we are seeing results of many companies actually are showing some stupendous growth, great numbers. It has been overall a healthy result season and we are today bringing to you our result review on a chemical company, company which has done really well over the last many quarters. If you compare versus the last year, the growth has been stupendous. Volume growth has been strong. Revenue growth, EBITDA growth, return on equity, all numbers actually are telling you a strong growth story. There is no major leverage. You are talking about a capacity expansion. So everything will make you feel very interested in terms of knowing more about the company. Let me now introduce the company here. The company is Meghmani Finechem Ltd. And let me now welcome the guest, the chairman and managing director of Meghmani Finechem, Mr. Maulik Patel. Maulik, welcome to the show.
Thank you, Piyush.
Now let's start from the numbers here. And I was taking a look at the sort of fourth quarter numbers here. Now, for our viewers, chemical is not an easy business. Usually, the chemicals which you produce, they are subjected to global commodity price movement. Very much the prices are very much on the face of the buyers. Everybody knows how the prices are trending. In this case, actually, the volume growth story of Meghmani Finechem has been really strong. So, sir, let's start from the fourth quarter numbers here. The volume growth was about 15% versus last year. We saw about 13% revenue growth, so a 2% decline subjected to price fluctuation. So, help us understand how much this volume growth was coming from really sort of new market share expansion and how much coming from new commission capacity.
Yeah. So, Piyush, last year is going to be the very exciting, very challenging because beginning of the quarter, first quarter was everything was big in terms of the prices, because of the Europe energy crisis, all chemicals was on the roof in terms of the pricing, and started declining as the situation started becoming normal in terms of the energy price. Winter was mild in Europe, so prices are started coming down. So if you consider from the quarter one to quarter four, prices on the declining trend in terms of the majority of the chemicals. In this meanwhile, in the second half of the financial year, we have commissioned all three new projects, which is we have been announcing since last. We have been talking in last 2 years about the CPVC first project, import substitute molecule 30,000 tons, epichlorohydrin, and the expansion of our caustic soda plant. So all three is commissioned. So in the normally the chemical plant, when it starts commissioning slowly and gradually, and that's why you can see the volume growth in the quarter four is coming majorly from this three projects which we have commissioned and started producing the result. Yeah.
Right. Since you have actually touched upon the volume story here, and I would say that for FY24, this perhaps looks like the most interesting story. So let's go one by one here. I have a table here in front of me, and that is telling me that we have the caustic soda CPP plant commissioned in September. So second half usually takes time to ramp up. In the fourth quarter, was this plant working at at full steam and like how much capacity?
Yeah. So if you see that, I think so epichlorohydrin, the one of the plant which we have commissioned in the second half of the in the last financial year, which was ramping up the capacity, and we have also increased the infrastructure to increase the volume of epichlorohydrin in USA as well as in Europe. And I think that is also commissioned. We have also sailed the first epichlorohydrin vessel to Europe, and in the US we are going to do it in this month. So volume is picking up. So in started 6 months, we have been approving all customers globally as well as in India. Our customers have approved our product, and now it is well established, and the volume will increase from quarter one this financial year onwards gradually. And if you see epichlorohydrin in quarter four, we have achieved 40% of the capacity. And the CPVC, which was started also last financial year, we have achieved almost 85 to 90% capacity in the quarter four. Pipe being a CPVC goes into the piping application, definitely it has a seasonal effect. Uh, but yeah, quarter four we have achieved 90% capacity, and as our capex is planned, we are also planning for expansion for the CPVC in this financial year.
Oh, very interesting. So, and is it fair to say that is you're looking at sort of completion of the expansion in the fourth quarter that actually was being projected?
Yeah, so all our capex plan for a chlorotoluene expansion as well as the CPVC, the second phase expansion, all both are going to be completed in the quarter four current financial year and start generating the results in the next financial year. So current year, our major volume growth will happen for the projects which we have commissioned last financial year, because partially we get advantage in the quarter four, but majority will get advantage of all three projects from in FY25 in volume growth. And FY25, we are going to get advantage from the CPVC second phase as well as chlorotoluene projects.
Okay. And coming back from perspective volume growth here, when we go into the first quarter, what sort of volume growth delta do we now expect from the three commission capacities?
So we are expecting the caustic soda capacity is going to ramp up slightly. ECH epichlorohydrin volume has moved in Europe also as well as in US. As I mentioned, the infrastructure we are expanding. So both, because of both infrastructure, epichlorohydrin capacity we are expecting little more volume. Even though the demand is subdued in Europe and US, but still because our products are approved in last financial year, so people have committed certain volumes, and which we are going to do it in quarter one onwards. But exact volume, I think I'm not able on hands on right now how much volume we are going to expect in the quarter one itself. But in quarter as a year as a whole, we are expecting I think uh, 35 to 40,000 tons sales in current financial year. And out of that, 50% we are expecting from the export and 50% we are expecting from the domestic market. And the CPVC is going to be 100% from the domestic market, and we are expecting 90% we have achieved in quarter four. So in the current financial year, we are also planning that we will achieve 85 to 90% capacity year as a whole in CPVC project as well. And caustic soda, we are expecting around 80 to 85% year as a whole. We are going to achieve in the current financial year.
Right. And from just for our viewers, for the closing FY23, like what sort of volumes we did, sir? I'm just trying to tally from FY24 perspective, what sort of volume trajectory this is looking like.
So FY23, we have, I think the overall volume growth in quarter four, we have done 15%, and as a year as a whole, we have done 9% as a volume growth. Yeah.
Right. And on an absolute volumes, was it like somewhere around 25-30,000 tons?
Absolute volume, all projects together, I
No,
think
no, no.
I need to check. What, yeah.
No, it's only a range. Range would be fine. I can understand that.
Yeah.
It's
So
fine. It's fine. So
yeah. Okay.
let's pick up the volume growth. So I think the on the
So
caustic soda,
year as
sir.
in
Oh, sure. Please
Yeah,
complete.
year as in whole, we have done approximately around 4 lakh ton, 4 lakh 21,000 ton kind of volume, in the last financial year.
Okay, fine. And caustic soda, sir, how's the pricing outlook looking like? Because the last two quarters there was a lot of buzz around the caustic soda prices, even the chloralkali prices. How's the pricing environment looking to you now for FY24?
Yeah. So, normally caustic soda, the major raw material is salt and energy. And energy, we consider is not as a part of it, it is part of raw material, we consider, because it is a major portion. And energy was fluctuating in the last financial year, and currently the prices are going down. So we are expecting the caustic soda prices also move along with the energy prices. So currently we are having, I think last year it was in the first quarter, not first quarter, but the second and third quarter was on the peak side in terms of the energy. And in the quarter four it has started going down, declining, and we are seeing, I think it almost bottom out kind of thing right now in quarter one right now. So based on that, our ECU also reduced. If you see in the caustic soda realization also, it has reduced in quarter on quarter basis. It has reduced around almost 15%, and we are expecting it is going to be stable at quarter one this level, based on the current energy cost, and probably started picking up from quarter two onwards.
Okay, and how actually looking from the perspective of the debt. Now I'm just shifting to numbers here. So how are we
Yeah.
actually looking at a strategy around the debt? Like very. So I think I would like to tell our viewers the net debt actually number has been reducing consistently. The leverage numbers again basically are also actually becoming more and more healthy. What's the plan, sir, now to keep the debt like as it is, or there is a sort of thought about strategy that every quarter you're going to keep reducing the debt?
So, we are a growth oriented company. So we are continuously investing a capex. So definitely, if you see the numbers in terms of numbers, absolute debt, I don't think so. It is going to be big difference on year on year. But as we are continuously investing, our probably debt will remain same as we are repayment schedule is also there on year on quarterly basis, on yearly basis. But still, we are going to incur the new capex for the future growth. So we are not expecting to reduce much debt over a period of time, but I think numbers will remain here or plus or minus, not big difference from the number of existing debt numbers. Yeah.
Yeah, because if you're growing the EBITDA, the net debt to EBITDA will automatically come down. So absolute might remain same, but as you're saying, the metrics will continue to become more and more healthy.
Yes, that's right. Because as our target, as we have kept that year on year, we would like to grow around 20 to 25% in terms of the in terms of the sales, and we our target is to achieve almost 5,000 crore by FY27. So to achieve those numbers, we have to continuously focus in terms of the capex as well. Yeah.
Okay, 5,000 crores by FY27. Will that imply the profit margins will remain around 15-16%? And which product you actually think that is going to give that revenue kicker here?
So as yeah, we are following both the models. We are trying to explore the import substitute molecules like we have done last in epichlorohydrin and CPVC, and such kind of molecules also has a increased potential as the market is growing in India. And we are also exploring first kind of molecules which is part of our integrated complex, like which can use one of the raw material of the existing complex, and we can do value addition further. That kind of chemistry also we are exploring. So yeah, it is going to be completely in our target to achieve internal chlorine consumption which is coming out from the chloroalkali almost to reach at 85% based on the current capacity. And currently, I think based on the existing projects, chlorotoluene which we have announced, and the CPVC second phase, I think we are going to achieve almost 75%. So we are thinking a chemistry which can use our internal strength and the raw materials, and we can go more on the value addition side and the specialty chemical side. You know.
Just to get my numbers right here, if there was no capex, like from here, you have already committed capex, but if there was no capex and the entire capacity would have started generating revenue, then where you have already reached versus your target of 5,000 CR and your revenue basically for FY23 was almost 2,200 crores. So versus the already planned under construction operating capacity, where we have already reached.
So based on the current project which we are planning, based on that, I think we can reach. Yeah, if you consider the current pricing level and current trend of the quarter one, I think we can able to achieve around. If it is running at optimum capacity, all the projects which we have planned commission, I think we can reach up to 3,000 to 3,500 crore. Yeah, between those line. Yeah.
Okay. Okay. So that almost means that we are 50% of the distance here, subjected to the international fluctuations. That is part and parcel of the chemical
Yeah,
business here.
that's
But yeah,
right. That
yeah. Now apart from that, sir, like as we now actually move into FY24, um, any plans of any acquisition, any inorganic way of growth, any plans to raise funds? Though we don't see any need in the balance sheet, but still we are asking any major plans of acquisition or any major geographies where you're looking for sort of expansion.
Uh, see, organic growth, we are continuously planning, and already, as I mentioned, we are continuously doing import substitute molecule. Yeah. And the same time, yeah, because if the good opportunity will come in coming times, definitely we will explore that because we are also thinking beyond 5,000 crore. And if you want to grow, the inorganic growth is also required. But up to 5,000 crore so far, what we have planned till 2027, We have planned everything internally and not beyond that. So beyond that, definitely we can plan inorganic. We are open for that. It is not like that we are restricted and we don't want to explore that opportunity. But because of the current situation in Europe, we think that the many opportunities will come in the chemical field to come in the country like India. So we are open for that kind of option also. Earlier we are thinking only on the organic growth, but now because of the current situation, I think we are open to listen if the opportunity will come.
Okay, fair enough. And as we have talked about the numbers and the results for our viewers, as a layman question, if you had to describe Meghmani Finechem in few words, what would that business model be? How basically Meghmani Finechem is fine tuning its revenue generating strategy? What the business is largely doing? I would say from the perspective of your where you are selling and what you are selling.
So, if you are talking about the make money, earlier we were only into the chloroalkali. And if you see the quarter four numbers, that we were moving into the derivatives more and more. So now next 5 years, no, I think till we reach the 5,000 crore, we are 100% focusing on the value-added chemicals and the derivative sides. And earlier, we our target to reach more and more value addition chemical and specialty chemicals. So our numbers will be more stable. In numbers we can achieve more stable way, rather than the fluctuating way, because chloralkali is little bit fluctuating and it is more volatile. So we would like to focus more on the value addition, and these numbers will go on, and I think we are targeting almost kind of 40-60 or 50-50 kind of level by in couple of years time.
Right, sir. And in your business, what's the sort of usual asset turnover you are happy with?
See, right now the capex and inflation is such a high that the asset turnover of any of the chemicals, it is going to be a big challenge, because capex is increasing even in India also. Definitely we are still better than Europe and US, but we are happy with around one. Yeah, our target to achieve 1.25 kind of level, in next 2 to 3 years time.
Yeah, the reason I asked this question because I wanted the viewers to be really aware about the metrics here, some stellar metrics which the company has been posting. Like, look at the return on capital employed, 16% FY21, then 29% FY22. New capacity started generating revenue, and now 32% FY23. And you again actually are going to see some more revenue generation coming from the newly commissioned capacity. Return equity even better than the ROC. You're talking about 36%, 40% ROE in FY22 and FY23. Usually considered as very very healthy by the market in the chemical space here. So that's on the return metrics. Last is that if I round it off and would like to ask you any sort of plans to really sort of digress from chemicals to any forward integration, backward integration, or this is where right now the company has a clear laid out path.
Yeah. So if you see, the Make Money Finechem is already in the completely backward integrated. Now we are moving towards the forward integration. So we are already there, and we are focusing 100% on the more forward integration and taking more on the specialty chemical side, and making our company stronger and stronger in terms of the business and in terms of the end segment also. So we are diversifying our company in the end segment also, because earlier if you see, our focus was we are targeting only 6 to 7 end user or end segments. Right now we are catering almost 15 different end segments. So if there is a fluctuation in one of the segments, then also it's going to be big challenge to survive in terms of the numbers and everything, in terms of the business also. So we are diversifying in terms of the end users, in terms of the product, in terms of the more on the specialty chemical side. So yeah, so I forget your question. Can you repeat again? Yeah.
No, it's fine. We'll close this conversation with one point here. Amongst your customers and the target customers, which sector is looking as the brightest spot for you for at least for the first half of FY24?
I would say if you are more closer to the B2C segment, that is better. And I feel, like launching CPVC as a segment, I think we are coming towards more B2C, and that is going to be more stable in the longer period of time. That's what we see. And in our second phase of expansion is also we are targeting because of that.
Okay, sir. I think it was a very informative conversation. I think our viewers would have gained a lot of information about Meghmani, a stock which has really done well, and results again are absolutely justifying the stock price here. From our side, thanks a lot for coming on our show and telling our viewers about all the sort of progress which Meghmani is making.
Thank you, Piyush. Thank you. Thank you.
And dear viewers, with that, we wrap up this show and hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.